good morning, everybody. Thank you very much for taking time out of your day to join us for today's presentation. No, I am not Jason Collins. My name is Matt Alina, and I'm taking over for Jason Collins this week as he is on a much needed vacation, and he will be back next week. For most of you, you probably know that November is Long-Term Care Awareness Month, and if you didn't know that, now you do. I pulled up a couple of interesting statistics before we went live here today, and a couple of things about long-term care. Roughly about 70 to 80% of the U.S. population age 65 and older will need some type of long-term care within their lifetime between now, when they're 65, and when they take their final breath. Interestingly enough, only 20% of the U.S. population uses long-term care or has a long-term care policy. And it's kind of a lack of a couple of things. One, lack of knowledge. A lot of brokers are afraid to sell it. I'm one of them. I don't know enough about it. I was just telling our guest, who I'll introduce to you in just a couple of minutes, that it's Greek to me. I know that there's a need. I know that we need to fulfill that need. And that's why we have these web trainings. So I'd like to introduce to you the regional account director for One America, Brian Shepard. Brian, thank you very much for taking time out of your day today to share with us what One America is doing about proactive planning and enhanced income certainty. So Brian, the floor is yours.
Well, thank you. And certainly thank you, everyone, for your time today, really unplugging from your business and working on your business. So with that, we have a lot of information that I want to go over, but I want you to just keep in mind, if you paint a picture in your mind's eye about long-term care conversations and long-term care planning, especially if it's Greek, to use Matt's words, and you don't feel competent or confident in the conversation, know that you have incredible resources. Both Jason and the entire team at URL can help you with that. And by the way, they have backup. They have industry experts, product matter experts like myself that are wholesalers. I am from One America. I've been with this company for several years. Been in the long-term care insurance industry now for 25 years. And I've seen a lot out there. I have personally produced and have hundreds and hundreds of long-term care insurance policies where I hail from in the greater Harrisburg, Pennsylvania area. So with that, I want to talk today about why a proactive conversation or planning is important, even if you don't sell the insurance product. Helping your clients understand the issue of long-term care and how are they going to handle that. Now, obviously, it does have a thread of why insurance is efficient and effective, and really thinking about an income need that our clients are looking for in lifestyle of retirement. How does long-term care events erect that potentially? So let's move into the conversation, and I'll ask you to think about a few things. How many of you on today's webinar have currently been experiencing a long-term care event in your family, or maybe your neighbor or someone that you work with, one of their loved ones have needed care now or in the recent past? I'll tell you, my mother just recently passed away earlier this year at 72 years old, having needed a bunch of long-term care. And certainly that had an impact on our family and my ability to do my job. How many of you manage assets? And if you think about it from a business perspective, if you are financial advisors and you're managing AUM, could that have an impact on the AUM, meaning the cost of care out there? Now, there's a lot of information in the universe of Google and other places of the actual cost, but I'll just zero in on the great state of Pennsylvania, the Harrisburg area. You're easily over $125,000 a year for care, and home care it certainly is not any less expensive depending on the amount of hours that you might need that. Now, another thing to think about is, do your clients have a similar experience involving long-term care? In other words, have you asked? What is their story? And what I found in my experience, going all the way back to the first day I talked about this insurance product, is that about 80% of us in the industry aren't asking our clients. They're asking us. Only 20% of the time or so, we're actually leaning into that and saying, hey, have you considered the consequences of failing to plan for a long-term care need? Now, that is really the differentiator between a proactive approach or being reactive in the industry, which still plagues us today. Now, a couple things that you have probably all heard and maybe in your own mind have been thinking too, especially if you don't do this every day. I don't have any interest. I'm probably never going to end up in a nursing home. Oh, it won't happen to me. Maybe mom and dad or grandma and grandpa never needed a day of care or relied on somebody else. The insurance, are you kidding me? That's way too expensive. I'll just go at it alone. In other words, I'll self-insure. If I get in a situation where I need care, I'll just start writing checks. Or I have a spouse or my kids, they're going to take care of me. A lot of the times, we as industry professionals that are focused on long-term care, these are easily debunked, or a lot of times the client is putting this out there because they just don't want to deal with it. So I just want you to think about that when you have that next long-term care conversation, is most of this is really not valid, and I'll explain why as we go through. So do you believe your clients, what do they value the most as they age? Now, if you look at this chart on the screen, you see as we're young, if we can, we want to put money away and we want it to grow for us, right? But as we get older, we're more focused on what? Turning all of that money that we saved into income that allows us to live out our wants, wishes, dreams, and the lifestyle in retirement. But the most important thing here is that our values end up changing over time, and therefore the strategies using insurance does as well. Now, I like to talk about markets. It is kind of a sensitive conversation in many ways, but there are cause and effects when we have to deal with income uncertainty. Now, if we look back all the way to 1932, bear markets have occurred, give or take, about every 5 years or so. We see that play out here just since COVID, right? Well, if the client's portfolio is going to drop, 20%, what's going to happen, or what has to happen for them even to return back to that even? And then we're talking about really timing the markets from a income withdrawal perspective. Now, the other thing that comes into play here is longevity. Did you know, just thinking about a married couple as an example, there's a 72% chance one of those spouses are going to live to age 85 or longer. Now, that is a long horizon in retirement. So if you end up living in retirement for 20 or more years, how many market downturns might there be? Those are things to consider, let alone the issue of long-term care events. But now, let's focus on long-term care. We've all talked about baby boomers, probably ad nauseum sometimes. But let's go back to when I started in the business around year 2000. The long-term care cost, not the insurance, but the long-term care cost that Americans were incurring was around $30 billion. There's our baseline. Now, as we march forward, 2011, our first baby boomer turned 65. In 2015, though, our expenses for long-term care went up 750% in just 15 years. Then as we continue to move forward, in 2019, expenses doubled again, over $440 billion of care services incurred by year 2019, in that year, by the way, not in aggregate, but just in that year. And our baby boomers have more than doubled. So now we're at about 32 million baby boomers out there. Now, here's the thing that looking forward, kind of forecasting, we're a couple years away from our first baby boomer turning age 80. Imagine what the costs are going to be in 5 years from now, 10 years from now. Could we hit $1 trillion annually for care cost? The answer is absolutely, and continuing to go north. Now, generally these slides are building slides, so you don't see really what's behind them. But I think the yellow marker here on the screen kind of tells it all. There are cause and effects. And if we look just statistically, which I don't tend to rely on entirely in conversation with clients, but there is a high probability if one person is going to need care, around 50 to 70%. If two people need care, that number goes up over 80%. But without looking at stats, can we all agree that clients are living longer? Absolutely, right? I like to say that clients, we're living longer. We're going to be made of titanium, right? We're not part of the die-out generation. We're a part of the wear-out generation. It may or may not happen, but if it does, this is what you want to focus on. What will your assets look like at that very time of need? What are the markets going to look like? Have you timed them correctly? And how efficient, from a tax perspective, are you going to be able to draw down to pay for those now incurred costs in the future? So let's look at impact on income. And this is where I like to focus a lot of my time if I'm in front of clients and we're thinking about long-term care planning and using insurance as a tool. A lot of our clients truly believe they have plenty of assets. Well, in their current situation, they probably do. They've done all the right things heading towards retirement. The light is green. They're going to be able to live that lifestyle that they so chose. But generally, we think about long-term care as not just one time that we're going to have to pay for it. It's going to last potentially years. And especially if we have spouses, a couple situation, we just don't know how long it could be. And where's the income going to fill that gap? In other words, do we have enough surplus assets to provide the income that's needed? So could we agree that long-term care, remember, not the insurance, but the need for a long-term care event and to pay for it is an income issue, not an asset issue? Otherwise, we are invading principle, and that is a one-way street. So how I'd like to position the assets that our clients have that we might end up using is, our clients have a combination generally. If they have a diversified portfolio, they have pre-tax money, they might have some non-qualified money, maybe some annuity sitting there. They probably have a brokerage account or a cash account, money market account, and they might use insurance. That is a well-rounded portfolio. But what if you ended up needing long-term care? Which bucket would you rather pull the monies from first? Now we know that pre-tax money, you have to pay federal government prior to you receiving whatever's left over. So if we had to pay for $1 of need, we're probably gonna have to pull around $1.30 out of that IRA. Our non-qualified bucket, maybe cut that in half, around $1.15 for every $1 of need. Or if you use cash, you're paying retail. In other words, for every $1 of need, you're just writing that check out for that cost. Why insurance is so valuable is because it is the efficient and effective way, not free. There is no such thing as a free lunch here. But imagine if you could have forecasted and said, I'll allocate 33 cents for every $1 of long-term care need. Now let's define insurance. And this may be contrary to what you are thinking here, but could we agree that insurance by definition is not designed to make you rich? It's designed to prevent you from becoming impoverished. That's why it exists. It's value, not performance. There's other engines that you can use to grow assets. This is to prevent you from becoming impoverished. So now let's look at Robert and Susan. They're in their early 60s, and they have a success rate with no long-term care need of about 87% of their portfolio really doing what the advisor said it was going to do. But they're also concerned about long-term care. So how would that affect maybe the surviving spouse? If they need to convert some of those assets we just talked about in the bucket approach before, what is the market conditions going to look like at that moment? And will the assets be taxable, and at what rate? We just don't know. In fact, a lot of times I hear in presentation, and this is from the crowd, is we could probably agree that taxes aren't going to go down as we head into retirement. So that is concerning as well. Now, you've probably seen this pyramid. I'll go back to my elementary school days when we talked about the food pyramid too, right? The carbs are on the bottom, right? We got to consume a lot of those back in the 80s. But when we think about goal-based financial strategies, our needs, of course, are the foundation. That's what we absolutely must pay for. And then as we move up to our wants and wishes, that is more of how do we enjoy those retirement years. But if we use that same pyramid and we think about the impact from a long-term care perspective, you know what I'm saying here. We will start at the top of the pyramid and our wishes are gone, then our wants are gone, and how many of our needs are we still going to be able to meet if we have that high incurred cost? So that's the idea of just thinking differently about this as holistic planning. Long-term care insurance is a cornerstone of any good financial plan. Now, Matt had made mention, just pulling from Google Land, about 20% of Americans have actually purchased some sort of a long-term care benefit for their portfolio. That number is actually pretty high because it's 20% of the people that are health qualified and dollar qualified. So if you just look at the populace of the country, generally speaking, cut that in half. Maybe about 150 million Americans, roughly, give or take, are eligible even from a health or wealth perspective to even consider some sort of insurance. And 20% of that number has actually considered it and implemented something. So we have a huge market of opportunity to educate and empower a lot of our clients that should be looking at insurance as an option. So what happens if long-term care need is out there? Well, that portfolio that had an 87% chance of success with no need could go down easily to 69% or so if one person needs care and it costs about $100,000 annually. Now, long-term care costs are geographically driven, kind of like real estate is. It's local, and it's supply and demand and how much care you might need. So if you start out at home, maybe that number won't be so high so soon, but eventually it's going to escalate. That's how it is statistically. If we need care for a longer period of time, look what happens here. So using the Monte Carlo scenario here, that portfolio sitting around 87% success rate with no need as Robert and Sue play out their retirement years. As you continue to need more care, we can see that by year 10, that success rate is cut in about half. So less than a 50% chance that these good clients can actually live out their wants, wishes, and dreams without invading principal. Now, enter One America, or quite frankly, any insurance company that's offering robust long-term care insurance. One America's been in the business for over 35 years offering these products. And when you think about the client's portfolio, where's the money going to come from? Remember, nothing's free. Where's the money going to come from to pay for insurance to augment the plan? Well, the nice part is pretty much anywhere in the portfolio, One America can help, from that pre-tax money, the IRAs, the stocks and mutual funds, to maybe some non-qualified money. You're sitting there, money market, maybe you have some cash on the sidelines that's idle and not used for lifestyle or a rainy day, or maybe other insurance products that you've already purchased and you've outlived your need. Maybe it was an annuity that you purchased that you thought you had to turn on the income rider, but you found out that, no, I don't. Maybe we could 1035 exchange that over. Or old life insurance. We see a lot of this where maybe you bought a whole life insurance, a permanent product, and it has a lot of cash value in it, but it's just outlived its need. You don't have any need for that death benefit anymore, and maybe you bring over that cash value to purchase a product that has long-term care benefits included in it. One America can help you with all that. So if you think about the insurance product now, here's the client's portfolio. Is there a strategy where we could shelter some of the assets for any future market conditions? The answer is absolutely, right? So we're looking at the portfolio. We're taking a sliver of the portfolio. Generally, we start on the conservative side because that's where you want to pull monies from first because of the tax implications. But if your client is heavy in qualified money, let's say IRA or 401k, we could use those dollars as well to fund an option. And One America has really the best package product out there in the industry right now for qualified money as well. But what we're in essence doing here by way of concept is we're taking a sliver of the portfolio to protect the entire thing. So a crack-resistant coating on the entire portfolio here by way of lifetime long-term care income. Now, make no bones about this. This isn't an insurance product, but what we are doing is we are now able, through how our concepts work at One America, is to provide that assurance of each month or each year it's going to pay out a certain amount first, and then the portfolio through income will pay any of that care in addition to that amount. Now, here's just an example. So going back to Robert and Sue, if they were able to reallocate $200,000 in this example, they could have, for a long-term care event, so we call that the live side of this product, about $97,000 each, all tax-free, that the insurance company would pay first for a long-term care event. So let's use Harrisburg, Pennsylvania as an example. I said about $120,000 on average if you ended up in a facility annually today. Imagine if One America could pay the first $97,000 and your clients would pay the last $20,000 and change. That's what insurance does. Now, obviously, you can buy a lot more insurance or a lot less here. We're just trying to give you perspective. If both clients need care, this is a couple scenario in this example, you double it. So you're going to have over $194,000 of income replacement through the insurance product before the clients have to pay. Now, what's nice about the One America concepts is that whether you live, die, or quit, there are benefits no matter what. So there's an insurance product on the front end of this using life insurance that will provide a tax-free death benefit of $270,000 if nobody needs care. And if one of the parties or both parties need care in this scenario, you draw the death benefit down dollar for dollar. So in this example, $270,000 will be paid out tax-free if nobody needs care, but if, let's say, we'll pick on the husband, he needs $100,000 of care and passes away, then there would be $170,000 left of death benefit that would be drawn down first for the spouse. Then what's really interesting, and this is all paid for through this single premium in this example, is that we have a rider here that is lifetime or unlimited long-term care coverage. Now, One America is one of only a couple carriers in the business that can offer this unlimited or lifetime long-term care. And the last piece of this puzzle conceptually is that, remember, this has life insurance on the front end. It's whole life insurance, so it's permanent. Therefore, it has high cash value. So your quit option, if you decide you want to move into another product, maybe you want a 1035 exchange or just simply cash out and use those monies for something else, there is cash value in these contracts. So asset-based LTC, as we like to say, is always an asset for your client. Now, when you think about other ways to fund these concepts, there are multiple ways. Remember that one screen of a couple slides ago where we talked about qualified money or non-qualified money? Well, you can use money up as recurring as well. In other words, you don't have to draw down a $200,000 from the money market account to move over. Maybe you did $27,000 a year for 10 years. So we call that recurring or annual premiums. We have several payment schedules. We're showing on the screen here 10 pay, 20 pay, or a pay to 95. So if Robert and Sue are 62, by age 95, if they're both still healthy and never needing a day of care, they would stop paying premiums at age 95. One other thing to note is the products at One America does have what we call a waiver of premium built in to the product. So if you're on claim, your premiums are waived. Now, think about that, or contrast that with your auto insurance, right? Gosh, if you get into a crash, your premiums are waived, aren't they, while your car's getting fixed? No. So that is one nice thing about these concepts at One America, that the premiums are waived if either party is on claim. Now, we do offer single insured contracts as well. We just highlight couples insurance because we see a lot of couples out there. Now, let's summarize a few things before we hand the mic back and see if there's any questions, whether it's just high level. Hey, here's what I was thinking, Brian. You kind of turn the light bulb on for me for a minute, or maybe we can talk about product if you have questions there as well. But in summary, what we know or believe to be true about forecasting in the future is longevity, right? There is going to be more Americans that are going to be crossing the threshold of age 80 pretty soon than ever before. And how are we going to handle that as a long-term care industry? Insurance is going to be becoming more popular as we go on. And of course, the care from just a supply and demand thought process is going to be something that is serious locally. You just, go back to the Harrisburg area where I call home. When my mom needed care, we had an insurance policy, and we basically got to the front of the line from some of the private care providers because they knew we had insurance to pay as the front line. We know about baby boomers, right? They are aging, and they are the highest percentage of clients right now. I'm 49 years old, just turned 49 last week. Nobody's talking about us, Gen X, but we're actually larger than the baby boomer population coming up here soon. We know that around 80% is for one person needing care, that there's a likelihood of around 80%. That number's probably going to grow just because more people that are living longer. I like to think about it as, 10 or 15 years ago, we might have passed away from things that now we are living long, healthy lives. We haven't even seen a baby boomer turn age 80. When that starts to happen, and when you go onto Google, you could find lots of information out there of the exact age that the highest percentage of Americans are needing long-term care. It's give or take 80 to 82 years old. And so when we think and we put all of that together in thought process, that is mind-boggling. But here's what's even more concerning, what we don't know. How many clients are going to be above age 80 and still living? What are market conditions going to look like in the future? In other words, are markets going to get stronger? Are they going to become more volatile? Can we time the market just right so when we need care, the markets are at the peak for our portfolio? How long might we need care? Another study that's out there is about half of all people that own long-term care insurance are going to end up with dementia or Alzheimer's. So statistically, from a claim perspective, half of all long-term care insurance claims are for Alzheimer's or dementia. Half, 1 in 2. Do you know the average time, lifespan, after diagnosis with Alzheimer's that someone will live? 8 years. Now, that doesn't mean that they're going to need care and the insurance product is going to pay for all of those 8 years, but that is a long time to have to be concerned about just the financial part of it, let alone the family. And then, of course, what happens if one spouse passes away after a need or they invade principal? What's left with the surviving spouse? Those are things to have candid conversations with our clients about, and ultimately they're going to draw their conclusion. All right, Matt, if we do need care, could we use insurance? Is it the most efficient and effective way? And can we qualify for it? Because these are health underwritten products. Most of the insurance products that you see out there have some level of underwriting, and One America happens to have both life insurance products and annuity products with long-term care riders that we can help many of your clients. So I'll end with this. Where does One America shine? We've talked about it a little bit, but One America has been offering shareable benefits, in other words, joint coverage, two people on one policy for decades, as long as we have been offering these products since the late 1980s. We're the only carrier that has been offering unlimited or lifetime long-term care benefits as an option, which still is more than half of our sales to this day, and we've been offering that for over 35 years. And when you think about qualified money, a vast majority of Americans are heavy in qualified money and have very little liquidity or dormant assets. So in other words, if you were to ask the client, which asset would you liquidate first if you needed to write that check for your care today or 20 years from now? Many clients are going to say, I did a good job of saving in my 401k, but that's about all I have. Well, we have a product, a concept that can allow that to play out extremely well. Currently, we're offering a 25% bonus on every dollar that's moved from qualified money. So in essence, there are more options available. We have incredible products that have reasonable underwriting with flexibility and high value. So with that, we're done with the presentation part of this. I hope there's a few questions out there that I can answer for you. If you'd like, please work with URL, and I'm happy to do one-on-one meetings with you through Jason and his team, and get you to a better level of competence and confidence in long-term care planning. Matt, do we have any questions?
I have a question. So, talking about being proactive, what is a good conversation starter with a client to kind of lead into having that conversation about One America, or talking about getting prepared or preparing for long-term care?
Yeah, I like to think about it in two different silos. Now, sometimes they converge on each other, but let's focus the first on the family, and the second is the finances. So the family, that is more of an emotional approach or conversation that we have. In other words, open-ended question, Matt, I know you may not need long-term care, but if you did, how would it affect your family? Have you had any personal experience with loved ones around this issue? And just allow them to marinate in it and say, you know what, my uncle did, or my mother's going through it right now, or really I don't have much experience. Then we can continue to progress in the conversation. So we're talking about family. What are the consequences to the family? And then the second one is around finances. If you did need long-term care, Mr. and Mrs. Client, how would you pay for it? And when I would sit in person with you, Matt, I would actually maybe even give you the pen and say, you know what, let's do an exercise. In what order would you allocate your assets? If you needed $120,000 of care in 2023, would you have to use qualified money? Would you be able to use the cash account? Would you have to liquidate that annuity? Because that is unfortunately, but it's where we need to be, uncomfortable part of this issue. The easy part would be, Thanksgiving's approaching. Matt and I had great conversation about how we're going to spend our Thanksgiving enjoying food and family. But around that same Thanksgiving table, oftentimes, somebody, generally the matriarch or patriarch, is going to say, oh, if I needed long-term care, just push me over the cliff or take me out into the woods and I'll just, I'll expire. and then everybody slaps their knee and it's a laughing good time and we move on because it's uncomfortable and nobody wants to be there. As a fiduciary, as a financial professional, our job is to help them understand that this is a reality. It could happen. And my job as your insurance professional is to help you understand that there are more options.
Absolutely.
Those are great conversation openers. Of course, it has to be organic. And what I highly recommend for advisors to do is have your own story. You know, my grandfather needed care on both sides of my family. My grandmother did as well, more acutely, but it happened to my mom very recently. What is my story, if somebody asked me? What is my experience? So find your story and use that, thread that through your conversations with the client because it's real.
Yeah. One of the things you talked about Thanksgiving as well is, instead of talking about politics, talk about long-term care. That should go over real well. One of the things I used to joke with my parents about was, you need to be kind to your children because we pick your home. Well, if my parents don't have the money to put them in a nice home or a long-term care plan, they're going to go into a home that isn't going to be as pleasant. But and this is just a conversation to have. And Brian, you've opened my eyes to a lot of different scenarios here. Of course, if
Matt, real quick,
Yeah.
Let's keep on Thanksgiving for just another 30 seconds.
Sure.
If you ask any insurance company that offers long-term care products and they have a claims database,
Mm-hmm.
what day do you think is the highest activity for clients or their loved ones to call in to open or discuss a claim opportunity for clients?
Probably in January, I'm guessing.
The day after Thanksgiving.
Really?
Why? Now, imagine this. You get on a plane, your entire family, you head down to Alabama where you grew up, haven't seen mom or dad for 6 or 8 months, maybe a year or more, and you had no idea it was as bad as it was. They're putting on a good face, right? Everybody's smiling. The cranberry sauce is amazing. But at some point between eating and football, the rubber meets the road and you pull mom aside. Hey, I'm noticing dad is different. Tell me more. Oh, let's walk over here. You get my point.
Yeah.
So when we think about these holidays, especially Thanksgiving and or Christmas time and some of the other holidays where people are coming back home, that's where you see the highest incidence of claims onset.
No kidding. Wow. Something to think about.
Mm-hmm.
Well, if anyone does have questions, please feel free to type your questions. I'll be happy to get those read and we can get those questions answered for you. But of course, this happens all the time. After we have parted ways, that's usually when questions pop up. And let me give you a couple of phone numbers that you can reach us. My direct line is 717-216-8041. The in-home or in-house long-term care specialist here is actually Jason Collins. Many of you probably already know Jason. Let me give you his direct line, which is 717-216-8038. Like I had said at the beginning, Jason is on a much needed vacation. He will be back next week. But in the meantime, between me and the rest of my colleagues here at URL, I would be more than happy to help you out with any of the long-term care needs and getting you these quotes for One America. And, Jason's really good as well at making those sales proposals sing a song for you to help you with generating sales and business and just that awareness for long-term care. So again, Jason's number is 717-216-8038. Brian, I appreciate your time today. And if we do have any questions, I will certainly pass them along to you. And with that, I think we're going to wrap things up here. So Brian Shepard from One America, he's the regional account director at One America. Brian, great information today. Thank you very much. Appreciate you and all that you do to help support URL and our agent partners.
Thank you, Matt. Thank you, everyone, for your time. Have a good day.
You too. Thanks, everybody. Take care.